Welcome back to Explain the Charts. Today, September 14th, 2025, we're focusing on XAUUSD, or gold, which has been making headlines with its recent price movements. The market is captivated by gold's strong performance, especially with the latest economic news unfolding. As of Friday, September 12th, gold was trading near a fresh all-time high of $3,650, holding marginal gains, as reported by FX Street. This strength is primarily attributed to a weakening U.S. dollar and increasing expectations for a Federal Reserve interest rate cut next Wednesday, September 17th. U.S. consumer sentiment data has been disappointing, contributing to the dollar's weakness, while rising initial jobless claims, hitting a four-year high, and headline CPI inflation at 2.9% fuel the dovish Fed outlook. Gold, being a non-yielding asset, typically thrives in a lower interest rate environment and serves as a strong hedge against inflation. Investing.com echoes this bullish sentiment, noting price stability above the psychological zone $3,600 and signs of a cooling U.S. labor market, reinforcing rate cut expectations. The dominant GDX gold stock ETF also surpassed a 14-year record, highlighting broader strength in the gold sector. DailyForex.com and Traders Union further emphasize gold's role as a safe haven asset, gaining value during economic instability, although Traders Union also points out its short-term volatility and forecasting difficulties. Their analytical forecast for XAUUSD suggested a price around $3,632.80 within a week, and up to $3,786.24 within a 4-week period, indicating continued bullish expectations. Now, let's turn our attention to the charts to see how these fundamental drivers translate into price action. On the daily chart, looking back from May 2024 to September 2025, we can clearly observe a sustained bullish trend for XAUUSD. Price has been making consistent higher highs and higher lows, illustrating a robust upward channel. Zooming into the period from mid-August through early September 2025, we see a particularly strong acceleration in price. Notice the sharp upward move in late August, pushing gold well above previous resistance levels. The rally intensified into September, culminating in a high of $3,674.07 on September 9th, and then reaching $3,656.52 on September 12th, aligning perfectly with the news reports of gold nearing a fresh all-time high of $3,650. The closing price on September 12th was $3,642.37, solidifying a strong close for the week. However, FX Street's analysis highlighted that the 14-day relative strength index was near overbought levels, around 80.00, suggesting that a corrective move might be on the horizon. This technical indicator warned of potential exhaustion in the bullish momentum, despite the strong fundamental tailwinds. Let's narrow our focus to the 15-minute chart to examine the intraday movements leading up to Friday's close on September 12th. Looking at the last trading hours of September 11th and into September 12th, we can see fluctuating, but generally upward, momentum. On September 11th, after touching a low of $3,612.85, gold showed resilience, gradually climbing back up. The buying pressure was evident in the series of higher lows and gradual ascent throughout the day, suggesting that dips were being bought up. Early on September 12th, the price continued its climb, reaching the daily high of $3,656.52 before encountering some selling pressure. This high point confirms the news of gold hitting all-time highs during Friday's trading session. The subsequent candles show a slight pullback, consolidating in the $3,640 to $3,650 range before the market closed for the weekend. This indicates that while the overall sentiment remains strong, some profit-taking or cautious trading occurred after reaching those peak levels. The close at $3,642.37 on Friday afternoon shows that gold maintained a significant portion of its gains despite the minor retracement. Now, let's discuss the outlook and key levels for XAUUSD as we head into next week. keeping in mind the market is currently closed for the weekend. For a bullish scenario, the primary driver remains the Federal Reserve's anticipated interest rate cut on September 17th. If the Fed delivers a significant dovish message or a larger-than-expected rate cut, gold could see a rapid acceleration past its recent highs, potentially targeting the $3,700 resistance level mentioned by FX Street. Continued weakness in the US dollar and persistent inflationary pressures would further fuel gold's appeal as a safe haven asset. Holding above the psychological $3,600 level, as seen on the daily chart, is crucial for maintaining bullish momentum. Conversely, a bearish scenario could unfold if the Fed's stance turns out to be more hawkish than anticipated, perhaps due to a revised view on inflation or unexpected strength in economic data. Any easing of geopolitical tensions or a significant rebound in the US dollar could also pressure gold prices downwards. A break below the immediate support around $3,600 would be a short-term bearish signal. The key support level to watch on the daily chart is $3,500. A decisive break below this could signal a more significant corrective move. Longer-term predictions, like those from FX Street analyst Aaron Singezer, suggest potential declines towards $2,530 to $2,500 if fundamental drivers shift. However, with current market conditions, such a deep correction appears less likely in the immediate short term. To recap, the important price levels to monitor closely for XAUUSD are the recent all-time high around $3,650 to $3,656, which now acts as a short-term resistance. The next significant resistance target is $3,700, a level that would indicate continued strong bullish momentum. On the downside, initial support can be found near the $3,600 psychological zone, which has demonstrated resilience. A more critical support level to watch is the $3,500 mark. A sustained break below this could signal a reversal of the short-term bullish trend. For unbiased predictions, there's a 60% likelihood that gold will attempt to retest and potentially break above the $3,650 high next week, driven by the strong anticipation of a Fed rate cut. This likelihood will be reinforced if the upcoming U.S. Michigan Consumer Sentiment Index and consumer inflation expectations data, due out later next week, align with or strengthen the dovish Fed narrative. However, there's also a 40% chance of a short-term pullback or consolidation, given the overbought RSI conditions and the natural tendency for profit-taking after significant rallies. Traders should look for confirmation from price action around these key levels, paying close attention to candlestick patterns for signs of continuation or reversal. Also, keep a keen eye on any surprise announcements or shifts in tone from the Federal Reserve, as well as geopolitical developments, as these can drastically impact gold's safe haven appeal. Monitoring the US dollar index for signs of further weakening or a rebound will also be crucial for gauging gold's direction. Thank you for joining Explain the Charts, and we wish you successful trading.